What up, Hyperchange? Welcome to another episode. We are talking about Netflix earnings today. They are hot off the press. The stock is trading around $328 per share, right around near all-time highs. The company is valued at about $150 billion here at this price. It seems like just quarter after quarter, Netflix reports these blowout numbers. Before we get into the financials, let's run through a couple highlights in the shareholder letter. The company was able to add a record 7.41 million subscribers in the quarter, up 50% year over year, well ahead of their guidance of 6.35 million. So just a blowout quarter for Netflix here in terms of global subscriber additions. The US was also really strong with almost 2 million new memberships added in just the US alone. Going into the quarter, Netflix already had 55 million paying subscribers in the US. That means almost 1 in 6 US citizens already had a Netflix account, yet they were able to add 2 million new paying members in the US in this quarter alone. So just really impressive to see them not even hitting maturity at this home market. It seems like a long runway is ahead of Netflix for growth. Now let's dive into the financials. Netflix reported revenue of $3.7 billion in the quarter. This was up 40% year over year from $2.6 billion in the prior year period. Operating income also exploded here, was up 74% to about $450 million, up from about $260 million in the year ago period. Now, important to remember, although Netflix does report positive GAAP income, they're actually losing significant amount of cash flow because of investments into original content, but more on that later. If we take a step back, looking at Netflix's just overall TV as a service business model continues to just push the limits on growth. Beautiful chart here. Once again, revenue is up 40% year over year. It is actually accelerating its growth rate. If we take a look at what management is projecting for Q2 2018, guessing about $3.9 billion in revenue. Remember, management is usually conservative, so Netflix could easily beat this number. If we annualize the revenue run rate, you can see that management is expecting the business to cross an annualized revenue run rate of $15 billion in Q2 2018. Growth has just been accelerating on a revenue basis here. This is due to a combination of them adding a ton more subscribers while also raising the price per subscriber. On a broader level, you can see that Netflix here has done a phenomenal job growing revenue every single year, actually been profitable on an operating income basis every single year since 2010. My projections sort of in line with what they've been reporting. We're looking at about $16 billion in revenue for 2018 and about $1.8 billion in operating income. But remember what I said, just because they're reporting positive operating income doesn't mean Netflix is actually making money. If we take a look at their cash flow from operations, you will see that it's been significantly negative starting in 2015, which is when they really put the pedal to the metal on spending for original content. Now, what's going on here? Why are they reporting a profit on their operating income, yet losing money in cash from operations? Basically, what's happening here is Netflix on their income statement isn't accounting for all of their content investments, because think about it. When you have a show like House of Cards or any of these other huge Netflix originals, the value of those shows lasts for years and years and years as people watch them, yet you have to pay all of the costs to develop it up front. They're spending the hard cash up front, but on their income statement, they're only accounting for a piece of that expense each year as they amortize the cost of that production. That's sort of the dynamic at play here with Netflix. So let's just assume that their accounting here is solid and that the operating income is indeed truly representative of what the business could earn, assuming they weren't spending on future content, to see what the valuation looks like. 460 million shares outstanding at about 330 per share, which is what it's trading at today after hours, after the news has been reported. We're looking at a market capitalization of $152 billion for Netflix. If we divide that by my $16 billion in 2018 revenue estimate, we're looking at 9.5 times price sales for Netflix. They are a software as a service business model. These are incredibly sticky. The market loves to give these a premium, and that's why we're seeing Netflix trade for almost double-digit price sales ratio. At 152 billion market cap divided by 1.8 billion in 2018 EBIT, looking at an 84 times price EBIT ratio, assuming we believe their accounting method. Netflix is just one of these growth stocks. It's not really being valued at all on what the cash the business is making today or the earnings they could be making today. This is all about growth. In the long term, I put out a video about a month or two ago called Netflix in 2028 that does a deep dive into what I think this business could look like in 2028 and how they could see streaming revenue pass over $100 billion annually within the next 10 years. Netflix is actually trending ahead of my projections because growth has been so impressive. I'm still a super long-term bull on Netflix, the company, as they move into original content. I think their moat gets stronger. I think there's room for them and Amazon and Disney to all win at streaming in the long term and displace cable networks. If there's one move that I would make if I was Netflix, it would be buying Cheddar. I made a whole Moonshot Monday about this. Cheddar is the startup, CNBC competitor that has burst onto the scene, seen incredible success. I've gone on Cheddar a couple times. I think they're killing it, and they're in the very early stages of dominating this passive TV, always on news and business news niche. They're launching this thing called Cheddar Big News coming up this year, which is going to be a CNN competitor. I think if Netflix acquired Cheddar and put their business news channel and their big news channel in their Netflix product, it would just increase the moat significantly. And then, you know, that huge problem on Netflix, whenever you go on, you're like, what should I watch? You know, there's a million shows. I don't know. I just want something on in the background. Cheddar and Cheddar News are perfect for that. And Netflix doesn't have any sort of content in that niche. Although I did read reports that they actually are starting to move into original news reporting. And I think if you watch some of their more recent content, like Dirty Money, there's definitely an edge of journalism to what Netflix is starting to move into. And I believe that acquiring Cheddar could be a cheap move to really accelerate the quality of their content in that niche. That's what I would be looking at. Just a crazy moonshot to throw out there to end the episode. Anyway, this is Hyperchange. If you like what you see and you want to support, please consider checking us out on Patreon. We have an exclusive newsletter there. Anyway, I'll see you guys next time. Peace.